Question 1. An adjuster receives a claim for damage caused by a hailstorm to a policyholder's roof. The roof is 15 years old and the policyholder asks for compensation to replace the roof with a new one. The adjuster determines that the roof's actual cash value (SEV) is $12,000 and the replacement cost (RC) is $15,000. What should the adjuster consider when determining the amount payable to the policyholder? A. Only the replacement cost (RC) should be paid because the policyholder is entitled to a new roof. B. The amount payable should be based on the actual cash value (SEV) minus depreciation. C. The adjuster should pay the full replacement cost (RC) without considering depreciation. D. The adjuster should pay the actual cash value (C), and as it is always used for roof damage claims. Answer: B. The amount payable should be based on the actual cash value (SEV) minus depreciation. Explanation: in property insurance, the policy's coverage determines whether an adjuster pays for actual cash value (SEV) or replacement cost (RC). Typically, unless the policy specifies replacement cost coverage, the adjuster would pay the ACV, which accounts for depreciation. In this scenario, the adjuster would subtract depreciation from the original cost to determine the amount payable. For instance, if the depreciation is 5%, the payout would be $12,000 minus the depreciation value. If the policy offered replacement cost coverage, then the full $15,000 could be paid. The difference between ACV and RC is crucial when adjusting claims. Question 2. Mr. Black is an adjuster handling a third-party liability claim involving a car accident. The other driver was at fault and the claimant's vehicle sustained damages of $10,000. Mr. Black is tasked with determining how much to pay for the damage. The claimant's policy includes a $1,000 deductible. What amount should Mr. Black pay to the claimant, assuming the liability policy limits are not exceeded? A. $10,000. B. $9,000. C. $1,000. D. $11,000. Correct answer: B. $9,000. Explanation: in a third-party liability claim, the deductible applies to the insured's own policy, not to the at-fault driver's liability coverage. In this case, Mr. Black will be compensating the claimant for the damages up to the policy limit minus the deductible from the claimant's own coverage. As the deductible is subtracted from the damages, the adjuster should pay $9,000, $10,000, $1,000. This reflects the actual amount of compensation due to the claimant under the terms of the insurance policy, considering that the at-fault party's insurance will cover the cost. Question 3. Scenario: Mr. Anderson's small business is affected by a flood that causes significant water damage to his building. His commercial property policy covers flood damage under specific conditions. Upon investigation, the adjuster discovers that Mr. Anderson did not implement the required flood mitigation measures outlined in the policy. What should the adjuster do in this situation? A. The adjuster should deny the claim entirely since the policyholder did not implement the required mitigation measures. B. The adjuster should adjust the claim but apply a reduction in the payout due to the policyholder's failure to mitigate the damage. C. The adjuster should pay the full claim as the policyholder cannot be expected to follow every mitigation requirement. D. The adjuster should ask for proof of the mitigation measures and, if not provided, deny the claim. Answer: B. The adjuster should adjust the claim but apply a reduction in the payout due to the policyholder's failure to mitigate the damage. Explanation: commercial property policies often include clauses requiring policyholders to take specific actions to mitigate loss, especially in cases involving environmental hazards like flooding. If the policyholder fails to follow these conditions, the insurance company can reduce or deny the claim based on the terms of the policy. However, the adjuster typically cannot deny a claim outright unless the policy explicitly states it. Instead, the adjuster can apply a reduction in the payout to reflect the failure to mitigate the damage as required. This practice is in line with fair claim settlement practices and helps ensure that the policyholder follows the necessary protocols to minimize the damage before it occurs. Question 4. An adjuster is handling a claim where the insured's home was damaged in a windstorm. The insured's homeowner's policy provides coverage for wind damage, but the adjuster finds that the wind was not the primary cause of the damage. It was pre-existing damage from poor maintenance. What should the adjuster do in this situation? A. Deny the entire claim due to pre-existing damage. B. Only pay for the portion of damage that can be attributed to the windstorm. C. Pay for all the damages as the windstorm caused the initial loss. D. Pay for the damages and leave the pre-existing damage out of the claim. Answer: B. Only pay for the portion of damage that can be attributed to the windstorm. Explanation: under insurance policies, damage must be directly linked to the covered peril. in this case the windstorm. If the windstorm caused damage but pre-existing damage was found, the adjuster should allocate the loss accordingly. Only the damage caused by the windstorm should be covered, not the damage that resulted from poor maintenance or prior conditions. The adjuster must determine the amount of damage attributable to the windstorm and exclude any claims for damage caused by lack of maintenance or neglect, as these are not covered under the policy. Question 5. Mr. Harrison has an auto insurance policy that includes comprehensive coverage which provides protection against non-collision damages such as theft and vandalism. His car is stolen and the adjuster determines that the car's actual cash value (SEV) is $18,000. The deductible is $500. What is the amount Mr. Harrison will receive from the insurance company? A. $17,500. B. $18,500. C. $17,000. D. $18,000. Answer: A. $17,500. Explanation: the adjuster must subtract the deductible from the actual cash value (SEV) when determining the payout. In this case, the ACV of Mr. Harrison's car is $18,000 and the deductible is $500. Therefore, the payout will be $18,000. 500 will equal $17,500. The deductible reduces the amount the policyholder will receive for their claim. This is standard practice for claims involving comprehensive coverage on auto policies. Question 6. Scenario: Mrs. Wright has filed a workers' compensation claim for a back injury that occurred while she was lifting heavy boxes at her workplace. However, during the investigation, the adjuster discovers that Mrs. Wright had a prior back condition unrelated to the workplace incident. The employer's policy covers workplace injuries, but the adjuster is unsure if the pre-existing condition affects her claim. What should the adjuster do? A. Deny the claim entirely because of the pre-existing condition. B. Deny the claim because it involves a pre-existing condition even if it was aggravated by the workplace injury. C. Approve the claim but only cover the portion of the injury caused by the workplace accident. D. Approve the claim for the full amount as long as the injury occurred at work. Answer: C. Approve the claim but only cover the portion of the injury caused by the workplace accident. Explanation: workers' compensation policies typically cover injuries that arise out of and in the course of employment. However, if the employee has a pre-existing condition, the adjuster must determine whether the workplace injury aggravated or accelerated the condition. In this scenario, the adjuster should approve the claim for the portion of the injury that was caused by the workplace accident and not cover the pre-existing condition itself. The law generally requires that the insurer cover only the exacerbated injury, not the underlying pre-existing condition, unless the workplace incident directly contributed to it. Question 7. An adjuster is working on a business interruption claim for a restaurant that was forced to close due to a fire. The policy covers loss of income due to business interruption, but it has a 30-day waiting period before payments can begin. The adjuster has confirmed that the restaurant was unable to generate income for 45 days. What amount is the adjuster responsible for paying, assuming no other exclusions? A. The full 45 days of lost income minus the waiting period. B. The full 45 days of lost income with no waiting period applied. C. Only 30 days of lost income, as the waiting period applies to the entire claim. D. The adjuster is not responsible for paying anything due to the waiting period. Answer: A. The full 45 days of lost income minus the waiting period. Explanation: business interruption insurance compensates for loss of income during periods when the business cannot operate due to a covered cause of loss, e.g. fire. A 30-day waiting period in this case is subtracted from the total number of lost income days, meaning the adjuster is responsible for paying for the remaining 15 days of lost income. The insurance will cover the period from day 31 to day 45, not including the initial 30-day waiting period, which is a common cause in such policies. Question 8. A homeowner submits a claim for water damage resulting from a burst pipe. The adjuster reviews the policy and discovers that the homeowner's policy includes coverage for sudden and accidental water damage, but excludes damage from slow leaks. What should the adjuster do? A. Deny the claim entirely, as the water damage is related to a slow leak. B. Approve the claim, as water damage from burst pipes is generally covered. C. Approve the claim, but reduce the payout for damages that occurred before the pipe burst. D. Approve the claim and ask the homeowner to repair the slow leak. Answer: B. Approve the claim, as water damage from burst pipes is generally covered. Explanation: most homeowners' insurance policies provide coverage for sudden and accidental water damage, such as that caused by a burst pipe. However, slow leaks or damage from gradual water exposure are typically excluded. In this scenario, the adjuster should approve the claim for the water damage resulting from the burst pipe as it falls within the scope of coverage for sudden and accidental water damage. The policy's exclusion for slow leaks does not apply here since the damage was caused by an abrupt event. Question 9. Mr. Lucas is handling a claim for a commercial property that was damaged in a fire. The fire caused extensive damage to the building's interior, but the building's exterior and structural components were not significantly affected. The insured asks for compensation to cover the entire repair costs, including non-damaged areas. What should the adjuster do? A. Approve the full claim for all repairs to the building. B. Approve the claim only for the damages to the interior and structural components. C. Approve the claim but reduce the payout to account for non-damaged areas. D. Deny the claim as non-damaged areas should not be repaired under the policy. Answer: B. Approve the claim only for the damages to the interior and structural components. Explanation: in property insurance, coverage is typically provided only for damages caused by a covered peril, in this case, a fire. The adjuster should approve the claim only for the damages that are directly related to the fire. This means compensation should only cover the fire-damaged areas, such as the interior, while repairs to non-damaged areas are not covered. Insurance does not pay for cosmetic repairs or improvements unless they are necessary to restore the property to its pre-loss condition. Question 10. An insurance agent is reviewing a client's homeowner's insurance policy. The agent notices that the policy includes an exclusion for damage caused by earthquakes, but the client lives in an area that is prone to seismic activity. What should the agent recommend to the client? A. Maintain the policy as is, since earthquake damage is always excluded from standard policies. B. Purchase an additional earthquake endorsement or separate earthquake insurance policy. C. Change the policy to include earthquake coverage as part of the standard package. D. Cancel the policy because the client's location is at high risk for earthquakes. Answer: B. Purchase an additional earthquake endorsement or separate earthquake insurance policy. Explanation: standard homeowners insurance policies typically exclude damage caused by earthquakes. Given that the client lives in an area prone to seismic activity, the agent should recommend purchasing additional coverage either as an endorsement to the existing policy or as a separate earthquake insurance policy. This will provide the necessary protection against earthquake-related damage which would otherwise not be covered under the standard homeowners policy. Question 11. An auto policy includes a provision for full coverage, but the insured has a history of speeding violations. After a recent accident, the adjuster determines that the damage was partially caused by the insured's reckless driving. How should the adjuster proceed with the claim? A. Deny the entire claim because the insured has a history of violations. B. Reduce the payout due to the insured's reckless driving as it contributed to the accident. C. Approve the claim in full since the insured has full coverage. D. Approve the claim in full but issue a warning about future driving behavior. Answer: B. Reduce the payout due to the insured's reckless driving as it contributed to the accident. Explanation: while full coverage generally covers both liability and physical damage, an insurer can reduce the payout or deny the claim if the insured's actions, such as reckless driving or violations of policy terms, contributed to the loss. In this case, the adjuster should assess the extent to which the insured's reckless driving contributed to the accident and adjust the payout accordingly, reflecting the degree of fault in the incident. Insurance is designed to cover accidents not caused by intentional or grossly negligent actions. Question 12. A commercial property owner files a claim for business interruption after their business was forced to close due to a natural disaster. However, the policy includes a clause that limits coverage to 12 months. The business was closed for 14 months due to extensive repairs. How should the adjuster handle this claim? A. Approve the claim for the full 14 months of lost income as the policy covers business interruptions. B. Deny the claim completely due to the business being closed for more than 12 months. C. Approve the claim for 12 months of lost income and deny the remaining 2 months. D. Approve the full 14 months as long as the business was closed due to a natural disaster. Answer: C. Approve the claim for 12 months of lost income and deny the remaining 2 months. Explanation: many business interruption policies have a time limit, such as 12 months, for how long coverage is available. In this case, the business was closed for 14 months, but the policy only covers 12 months of lost income. Therefore, the adjuster should approve compensation for the first 12 months and deny the claim for the remaining 2 months, as the insurer is not obligated to cover more than the policy's stated limit. Question 13. An insured has filed a claim for damages to their home caused by a fallen tree. The tree fell during a windstorm and the policy provides coverage for wind damage but excludes coverage for falling trees. How should the adjuster proceed? A. Deny the claim because the policy excludes coverage for falling trees. B. Approve the claim because the windstorm caused the tree to fall. C. Approve the claim for only the damage caused by the tree, excluding any wind damage. D. Approve the claim but request the insured to pay the deductible in full. Answer: B. Approve the claim because the windstorm caused the tree to fall. Explanation: while the policy excludes coverage for falling trees in general, the adjuster should evaluate the circumstances under which the tree fell. Since the windstorm is a covered peril under the policy and it was the wind that caused the tree to fall, the damage should be covered. The adjuster must differentiate between the cause of the tree falling, windstorm, a covered peril, and the exclusion for damage caused by falling trees from natural causes not linked to a covered peril. Question 14. A homeowner's policy includes a special endorsement for personal property coverage. After a break-in, the insured discovers that several high-value items were stolen. The insured asks the adjuster to cover the full replacement cost of the items, but the policy provides actual cash value, SCV coverage for personal property. How should the adjuster respond? A. Approve the claim for the full replacement cost of the stolen items. B. Approve the claim for the actual cash value, ACV, which accounts for depreciation. C. Deny the claim because the CV is not enough to replace the items. D. Offer a settlement for half of the stolen items' replacement value. Answer: B. Approve the claim for the actual cash value, SCV, which accounts for depreciation. Explanation: the policy specifies that personal property is covered under actual cash value, SCV, which means the payout will be based on the current market value of the items at the time of loss, accounting for depreciation. The adjuster should not approve the full replacement cost unless the policy specifically provides replacement cost coverage for personal property. Since ACV is the specified coverage, the adjuster should pay out based on the depreciated value of the stolen items. Question 15. An insured's car is involved in an accident and the insurer determines that the car is a total loss. The insured has an auto policy that includes a provision for replacement cost coverage. What should the adjuster do in this scenario? A. Pay out the actual cash value, SCV, of the car minus the deductible. B. Pay the full replacement cost of the car without accounting for depreciation. C. Pay the full value of the car including the deductible. D. Deny the claim because the car is a total loss. Answer: B. Pay the full replacement cost of the car without accounting for depreciation. Explanation: in the case of replacement cost coverage, the insurer agrees to pay the cost to replace the car without deducting for depreciation. Since the car is a total loss, the insurer will pay the full replacement cost of the car as specified in the policy terms. This is distinct from actual cash value, SCV coverage, where depreciation is deducted from the payout. Question 16. During a routine review, an insurance agent notices that the client has purchased a health insurance policy with a high deductible plan but has not considered a health savings account, HSA. What should the agent recommend? A. Suggest that the client stick with the high deductible plan but opt for a lower deductible. B. Recommend that the client open a health savings account, HSA, to reduce their out-of-pocket expenses. C. Advise the client to switch to a lower deductible policy without an HSA. D. Recommend that the client cancel the policy altogether and purchase a more comprehensive plan. Answer: B. Recommend that the client open a health savings account, HSA, to reduce their out-of-pocket expenses. Explanation: a health savings account, HSA, is often a beneficial option for individuals with high deductible health purchases, so the funds in an HSA can be used to pay for qualified medical expenses and reduce the overall out-of-pocket costs. Additionally, HSAs offer tax advantages as contributions are tax deductible and withdrawals for qualified expenses are tax-free. Therefore, the agent should recommend opening an HSA to help the client manage their high deductible. Question 17. An adjuster is investigating a claim for water damage caused by a burst pipe in an insured property. The insured has not maintained the plumbing system and the pipes had shown signs of wear and tear. How should the adjuster handle this claim? A. Deny the claim due to lack of maintenance. B. Approve the claim, as burst pipes are covered by the policy. C. Approve the claim only for the portion of damage that was not related to wear and tear. D. Deny the claim, as the cause of the burst pipe was avoidable. Answer: C. Approve the claim only for the portion of damage that was not related to wear and tear. Explanation: insurance policies typically cover sudden and accidental damage, but may not cover damages arising from the lack of maintenance or wear and tear. In this case, the adjuster should approve the claim for the damage caused by the burst pipe, but only for the portion that resulted from a covered peril, e.g., sudden burst, not from the pre-existing wear and tear. The policy will not cover damages that are the result of negligence or lack of upkeep. Question 18. An insured has submitted a claim for a property loss due to vandalism. The policy includes coverage for vandalism but requires the insured to report the loss within 48 hours. The insured delayed reporting the claim by 5 days. How should the adjuster proceed? A. Deny the claim due to the late reporting of the loss. B. Approve the claim for vandalism as the insured's delay is insignificant. C. Investigate the circumstances surrounding the late reporting before deciding on coverage. D. Approve the claim but apply a penalty for the late reporting. Answer: C. Investigate the circumstances surrounding the late reporting before deciding on coverage. Explanation: while the policy specifies a 48-hour reporting requirement, late reporting does not automatically void the claim. The adjuster should investigate the reasons for the delay if the insured had a valid reason for not reporting the claim on time, e.g., if they were unable to contact authorities due to a personal emergency. The adjuster may choose to approve the claim. However, if the delay was due to negligence or failure to comply with the policy terms, the insurer may deny the claim or apply a penalty depending on the severity of the delay and the policy language. Question 19. A commercial property owner has a business interruption policy that covers lost income due to direct physical damage to the property, and after a fire severely damages the building, the insurer finds that the damage was primarily caused by poor maintenance and not by the fire itself. How should the insurer handle this claim? A. Approve the claim for business interruption as the property was damaged by fire. B. Deny the claim because the damage was caused by poor maintenance and not by the fire. C. Approve the claim for business interruption, but only cover a portion of the losses due to negligence. D. Deny the claim, but suggest a future policy that covers poor maintenance. Answer: B. Deny the claim because the damage was caused by poor maintenance and not by the fire. Explanation: business interruption insurance covers lost income resulting from direct physical damage to the property if the insurer determines that the fire was not the direct cause of the damage and the damage was instead due to poor maintenance, a pre-existing issue. The insurer may deny the claim. Insurers typically do not cover losses that are caused by factors such as neglect, poor upkeep, or lack of maintenance, as these fall outside the scope of coverage. Question 20. An individual holds an umbrella insurance policy that provides additional liability coverage above and beyond their primary auto and homeowners policies. The individual is involved in a car accident where they are deemed at fault and a lawsuit is filed. The damages exceed the limits of the auto policy. How should the umbrella policy respond? A. The umbrella policy will automatically pay for the excess damages without any conditions. B. The umbrella policy will only pay if the auto policy limit has been exhausted. C. The umbrella policy will pay for the excess damages, but only if the auto policy covers the full cost of legal defense. D. The umbrella policy will deny coverage if the car accident was the individual's fault. Answer: B. The umbrella policy will only pay if the auto policy limit has been exhausted. Explanation: an umbrella insurance policy provides additional liability coverage above and beyond the limits of primary policies, such as auto and homeowners insurance. However, the umbrella policy typically only kicks in once the limits of the primary auto policy are exhausted. In this case, the umbrella policy would cover the excess damages beyond the auto policy's limit, provided that the primary coverage is fully used up. It does not provide primary coverage or act until the underlying policy limits are exhausted. Question 21. A health insurance policy covers medical expenses for a policyholder's hospitalization. The policy includes an exclusion for elective surgeries, but the insured undergoes a non-emergency procedure that was not pre-authorized by the insurer. How should the insurer handle the claim? A. Deny the entire claim because the procedure was not pre-authorized. B. Deny the claim for the non-emergency procedure, but approve any emergency care. C. Approve the claim in full as the procedure was medically necessary. D. Approve the claim but only cover the costs for emergency services during the procedure. Answer: B. Deny the claim for the non-emergency procedure but approve any emergency care. Explanation: health insurance policies often contain exclusions for elective surgeries, especially if they are not medically necessary or pre-authorized. Since the insured underwent a non-emergency procedure that was not pre-authorized, the insurer may deny coverage for the elective procedure. However, if any emergency care was involved during the hospitalization, e.g., life-saving treatment or urgent care, the insurer would still be obligated to cover those expenses as per the policy terms. Question 22. An insured purchases a flood insurance policy for a property located in a high-risk flood zone. Several months after the policy begins, the insured files a claim for damages caused by flooding. The adjuster discovers that the property was not in a designated flood zone at the time the policy was issued. How should the insurer handle the claim? A. Deny the claim because the property was not in a flood zone at the time of the policy. B. Approve the claim as the property is located in a flood zone at the time of the claim. C. Approve the claim but adjust the payout for the coverage limits of the flood zone. D. Investigate whether the property was in a flood zone at the time of the event. Answer: D. Investigate whether the property was in a flood zone at the time of the event. Explanation: flood insurance is typically tied to the location of the property and whether it is in a designated flood zone at the time of the incident. The insurer should investigate whether the property was in a flood zone at the time of the actual flood event, rather than when the policy was issued. If the property was in a flood zone when the flood occurred, the claim should be processed as per the terms of the policy. If the property was not in a flood zone at the time of the flood, the claim may not be eligible for coverage. Question 23. An insured has filed a claim for fire damage to their rental property. The policy includes a provision for replacement cost coverage for the structure, but only actual cash value (ACV) for personal property. How should the adjuster handle the claim for the personal property inside the home? A. Approve the claim for full replacement cost for both the structure and personal property. B. Approve the claim for the structure replacement cost, but pay only a CV for personal property. C. Deny the claim for personal property as it was not specifically covered in the policy. D. Pay the ACV for both the structure and personal property. Answer: B. Approve the claim for the structure replacement cost, but pay only the CV for personal property. Explanation: the policy provides different types of coverage for the structure and personal property. Since the structure is covered under replacement cost, the insurer will reimburse the cost to replace the damaged building. However, since personal property is covered under actual cash value (SCV), the insurer will calculate the payout based on the depreciated value of the damaged personal items. This approach ensures that the insured receives the appropriate compensation for each category of loss based on the policy terms. Question 24. An insured has a homeowner's policy with a standard deductible of $1,000. A storm causes $5,000 worth of damage to the roof. How much will the insurer pay for the claim? A. $4,000. B. $5,000. C. $1,000. D. $0. Answer: A. $4,000. Explanation: the insurer will subtract the deductible from the total damage. In this case, the total damage is $5,000 and the deductible is $1,000. Therefore, the insurer will pay $4,000, $5,000, $1,000. Deductibles reduce the amount the insurer must pay for a covered claim. Question 25. An insured has a renter's insurance policy that covers personal property losses due to fire, theft, and vandalism. The insured's apartment is damaged by a fire, but the fire started in an adjoining unit and spread into the insured's apartment. The insured is required to pay a $500 deductible for property damage. How much will the insurer pay if the total loss is $3,000? A. $3,000. B. $2,500. C. $500. D. $0. Answer: B. $2,500. Explanation: the insurer will pay for the property damage minus the deductible. The deductible in this case is $500. Therefore, the insurer will pay $2,500, $3,000, $500. The fire damage is covered because the renter's insurance policy typically covers fire damage, regardless of where the fire originated. Question 26. An insured files a claim under their auto insurance policy for a collision with another driver. The other driver is uninsured and the insured's policy includes uninsured motorist coverage. How will the insurer handle the claim? A. Deny the claim because the other driver is uninsured. B. Pay the claim under the insured's uninsured motorist coverage. C. Pay the claim under the liability coverage of the insured's policy. D. Pay the claim under comprehensive coverage. Answer: B. Pay the claim under the insured's uninsured motorist coverage. Explanation: uninsured motorist coverage is designed to protect the insured in the event that they are involved in a collision with an uninsured driver Since the other driver does not have insurance, the insurer will pay for the damages under the insured's uninsured motorist coverage subject to the policy limits. Question 27. A property insurance policy provides coverage for accidental damage, but the policy excludes coverage for damages resulting from wear and tear. The insured's roof is damaged after several years of wear and they file a claim. How should the insurer respond? A. Deny the claim because the damage is a result of wear and tear. B. Approve the claim in full as wear and tear is not typically excluded. C. Approve the claim, but only cover the repair costs related to the accidental damage. D. Approve the claim, but only for the depreciated value of the roof. Answer. A. Deny the claim because the damage is a result of wear and tear. Explanation. Wear and tear is a common exclusion in property insurance policies, and any damage caused by long-term deterioration or maintenance issues is not covered. Since the roof damage is attributed to wear and tear, the insurer will deny the claim under the terms of the policy. Question 28. An insured has an auto insurance policy with both comprehensive and collision coverage. The insured's car is stolen and the insured files a claim. Which type of coverage will apply to the claim? A. Comprehensive coverage. B. Collision coverage. C. Both comprehensive and collision coverage. D. Neither coverage. Answer. A. Comprehensive coverage. Explanation. Comprehensive coverage applies to losses that are not caused by a collision such as theft, vandalism, or natural disasters. Since the insured's car was stolen, the appropriate coverage is comprehensive insurance. Collision coverage would apply if the insured's car had been damaged in a collision. Question 29. An insured has a liability policy with limits of $500,000 per occurrence and $1 million aggregate. The insured is involved in an accident where they are found to be liable for $400,000 in damages. How much will the insurer pay for the claim? A. $400,000. B. $500,000. C. $1 million. D. The entire $400,000, but only if there is no other claim. Answer. A. $400,000. Explanation. Since the total damages in this case are $400,000, which is below the per occurrence limit of $500,000, the insurer will pay the full amount of the claim, which is $400,000. The $500,000 limit per occurrence applies here, and the insurer will not exceed that amount. The aggregate limit only comes into play when multiple claims are filed during the policy period. Question 30. An insured has a commercial general liability policy that includes a pollution exclusion. The insured's business discharges harmful chemicals into the environment, leading to a pollution lawsuit. How should the insurer handle the claim? A. Pay the claim, as pollution exclusions typically don't apply to lawsuits. B. Deny the claim, as the pollution exclusion applies in this case. C. Pay the claim but only up to the liability limits for environmental damages. D. Deny the claim and suggest the insured purchase separate environmental coverage. Answer. B. Deny the claim, as the pollution exclusion applies in this case. Explanation. Pollution exclusions in commercial general liability policies typically exclude coverage for environmental damage caused by pollutants, including discharges into the environment. In this case, since the insured's business was involved in a pollution-related incident, the pollution exclusion applies and the insurer will deny the claim. The insured may need to purchase separate environmental liability insurance for such risks.